It's now market close on Friday, and we're speaking with Bill Baruch, president of Blue Line Futures. What a day, Bill. Let's recap it for the audience. What happened with gold and silver today?
Well, it started middle of the week when we failed in gold at 1835, 1840 one more time. And it really came on the heels of what was called hawkish tone from Fed Governor Clarida, which I think he was more in line, but it was coupled with the record-setting ISM non-manufacturing, the services read. So gold reversed pretty sharply from technicals there, as well as the fundamentals changing. At that time, too, we saw the 10-year yield double bottom, but the 10-year price, the futures price, actually made a new high. And supposedly there was a fund blow-up that lost a few $1 billion. They tapped out of some shorts, some capitulation there. And then that was on the ADP move, ADP payrolls, which missed, and all this started snowballing. You got the Fed governor talk, you got the ISM non-manufacturing, and so when the Treasury prices reversed, so did gold and silver, and that's what we've seen here throughout the week. Just sort of some ongoing weakness in gold and silver. Gold back to 1,800, and then non-farm payroll today was not what we saw from ADP, but it was a nice, very strong, robust job growth. 940,000 jobs. So now that just continued to pressure gold. We've seen yields continue to rise, and gold and silver continue to make new lows. So gold's selling off here today, running into a trend line going back quite a bit. 1950 is the level. The trend line goes back to June of 2019 when gold just started ripping up and roaring, finally got back above 1,400. So this is a big area that we're trading into to Sunday night.
Let's take a look at the gold chart here. All right, so here we've got a 1-year gold chart. Now, as you can see, gold has not been doing great over the last 2 months or so. Actually, this is the biggest single day drop we've had since June. I was looking at the daily price action, and so this is a 2.3%, 2.4%, depending on the time of the day you're looking at. Significant single day drop. As a trader now, Bill, you're looking at this drop. What are you thinking? Are you thinking buy on the dip because it's like 2 standard deviations higher than what we usually get for gold? Or are you thinking this is a break in the trend line below, prepare for more downside action?
So I stepped out of the way. I was looking for 1780 to hold. 1780, 85 was an area. I thought there was some decent volume in the 70s, but when we started to give through there, I kind of stepped aside on it. There's some support in silver, 2380, 2420 that we're holding for now. But what I'd be really fearful of is Sunday night. We close lower today. We break that trend line, and with no volume, coming into European hours, what could we really see? How low could this go? So I like being long gold from an investment standpoint. We still have long-term investments in gold that hasn't changed. We need more of a thematic change there. But for the time being, as a trader, I had to step on the sidelines, unfortunately.
How low can gold go? You asked an excellent question. That was actually my next question. Help us out here, Bill.
Yeah, that's a tough one to say. I mean, we had a lot of really whipsaw consolidation going back to the pandemic. When the onset of the pandemic, people would say maybe 1,600 if we really start breaking down. We still got lows in the year, 1,670 area. So there's areas where the market has held before. What we're seeing though now is sort of the potential breach of the low from June. And what would do if this trend line breaks? The low from June was 1750. 1750 is that trend line as well. But what we have in development here is a left shoulder in November, a head in March, and the right shoulder that's being developed or was thought to be developed in June, now retested that right shoulder. That's okay to retest that right shoulder. This is an inverse head and shoulders. We need to hold here. It would be very bullish, but if we start breaking new lows, then that inverse head and shoulders is totally negated, and this is just a lower peak after a lower peak after a lower peak in gold. And that doesn't bode very well.
All right, so I guess there's not much left to do except wait till Sunday night's open, and then traders can decide from there. So the key levels you're looking for the downside, well, you mentioned it. What about the upside, rather? What about the upside, Bill? What can trigger gold to rally back up to where it was potentially last week? Do we have to see a reversal of the interest rates? Do we have to see the dollar weaken? What are you looking at?
Well, here's the thing. I do think the stock market is going to sell off on Monday. Not by sell off, I mean a nice, healthy pullback. 1-2% at least. To start. Maybe it starts Monday. These Fridays market doesn't want to sell off on Fridays, and I mean it has over the past couple months. It has a couple times, but if it has a reason to go higher, it stays higher. So if the stock market does pull back a little bit, that could stop the 10-year and the treasury market from selling off a little bit, and that could help gold hold ground. Now, it matters what the U.S. dollar is doing, because now the U.S. dollar, which had an outside bullish day on Wednesday, is trading back up to 93 and back to a potential breakout. You remember, you started June, dollar was going to break out, then it failed, now it was going to break down. Now we're back up to breaking out again, and it just can't pick its direction. And that's really a byproduct of the Fed just waiting, and maybe they seem dovish this week, maybe they seem hawkish this week, maybe they're not going to taper. So it's going back and forth. And at the end of the day, if the dollar breaks out above 93, then gold's going to have a tough time to rally. If the 10-year treasury yields keep going higher, which I think they can go higher a little bit, that's also going to hold gold back. But if the stock market does find a little bit of a wave of weakness, that could stop the 10-year from the yields from rising, and it could bid up the prices a bit along with gold. So that's what we got to look for Friday, and I mean coming after Friday's day's close and looking into Monday.
Why would the stock market sell off next week? I thought strong jobs numbers mean very good optimism going forward.
Well, we got some weakness in tech, and tech has been obviously the leader as
NASDAQ
yields have gone up. Today. Yeah. I do think that we wrote about it in the Morning Express that it's a daily letter that we put out for our clients covering the S&P, NASDAQ, crude oil, gold, and silver. And we talked about it, strong jobs report today. You see value stocks, cyclicals lead. And that's pretty much what we have seen. But I think you sure see some weakness in tech. Maybe there's a little profit taking coming off. There's a wedge pattern in the S&P that it traded to in the highest today. And again, Fridays, when we have momentum coming from the middle part of the week, Fridays just have been unscathed. They've been trading higher. You can't fight it. But today wasn't a 1% gain that just melted higher all day. Today was a nice little quiet like 7, 8 points in the S&P. So I think that we could see a little just wave of healthy weakness, and I think that the market could consolidate a little bit, and that would again underpin the treasury prices, which could help gold at 1750.
Well, let me ask you this. Were you surprised at the strong jobs numbers that came in today? 900-something odd thousand jobs added. That's a very strong report. Did that number shock you at all?
No, it didn't shock me. I was expecting somewhere around 800, and it was a little on the upside of that range. I think overall the Fed should be moving to taper. What surprised me more than that though was gold's overall reaction, because you had a lot of banks, Goldman Sachs, for instance, calling for 1 million jobs. So it wasn't new news. You already had Fed Governor Clarida. You already had a blowout ISM report that alluded to good jobs. So it wasn't a surprise to see a good jobs report. In my mind, gold had already begun to price in this jobs report by losing ground from 1835 and trading down to 1800, a low of, I think it was like 1793 before the number today. So I really think that that part really what surprised me is, there are shorts in this market. There are banks that want to be short gold, and that they're stepping on the longs here. It's similar to what we saw in June. It's exacerbating the downside, and what they're trying to do here again is break that nice inverse head and shoulders, which would open the door for further selling. This is all technical at this point, and that's it. Should gold trade down to 1700 or 1670? No, but at that point, it becomes really very very technical trade.
Okay, so you weren't shocked. 1 million jobs projected by some banks. What do you think the Fed's thinking at this point? Do you think they'll continue their hawkish tone? You mentioned that you would expect them to taper following this. Is that what maybe gold was responding to, the possibility of higher interest rates very soon?
Yeah, I do think gold that's what it is responding. That's why it gave up the $40 from the highs in the week. But again, I thought that's what we were priced again, the better jobs report in that move. If yields continue to rise, it's going to weigh on gold for sure. The gold has been very range bound, 1750 to 1850 over the last month and a half. I do think that the low and the yields are in. I don't think they're necessarily going to run away. I think we can get up to 1.5%. But in my mind too, it was the dollar was breaking down, and the dollar wasn't going to reverse as sharply as we have seen. And that there is what's really, I think, holding gold back more than anything. And when gold becomes vulnerable of late, when it is vulnerable, you get those banks that are just stepping on it.
Well, let me ask you this. So suppose jobs continue to be strong, and suppose the unemployment rate continues to fall for the rest of the summer, for the next 2 months. What do you think is going to happen at the September FOMC meeting? Do you think the Fed's going to signal tapering?
I'd be surprised if they didn't, and I wouldn't be surprised if they did before then. So I really think that this strong jobs report lays the groundwork for maybe a signal as early as Jackson Hole. 3 is a trend. I've said it with inflation on your show. I've said it. I'm saying it again with the jobs. We have 2 strong reports now. I mean, if we see another strong non-farm payroll report in September for August, I mean, the Fed has no choice. I mean, their back's against the wall. I mean, you got congressmen out there now too. You have Janet Yellen, the Treasury Secretary. She's saying that the Fed, the groundwork is here. Some of their goals are being met right now. They should lay this taper out. So the Fed has no excuse. Now, you look back at the two strong CPI numbers that were April, May, released in May and June. The Fed got out ahead of that and didn't even wait for the third number. So maybe we do see some signal from the Fed in Jackson Hole before they get that third jobs report in the same sort of way.
All right, well, let's talk about silver briefly. Silver also saw a big move downward today. What's your view on silver? Is it going to move concurrently with gold going forward, do you think?
Yeah, I had hit the sidelines of silver as well. I was trying to be patient with this stuff and see if we get some sort of rebound, if the dollar wasn't going to hold ground as well. But it just seems like the door is open, and it seems like silver is going to try to trade lower. It's taken out the recent low. There is some previous lows that's overall support 2380, 2420 that it's trading down into. And I think it really matters a gold at this point. If gold can hold 1750 and show some ground, I'm not saying silver's going to rebound immediately as well. But that's what silver needs at this point. Silver is sort of moving into a big support area, but in some argument there, it's almost into no man's land. Where, in the same thing we saw here today, when the banks are stepping on this and the vulnerabilities there in the metals, there's just no one that wants to buy. It's a buyer's strike right now. We need reason to see buyers to step in, and the metal market is just not giving us that at this point in time.
Okay, and just to close off, how would you play silver and gold using futures, options? What strategies would you take going forward?
Well, again, if we hold 1750 through Sunday night and Monday, I think that's be an area. I like the idea of looking at potentially maybe a risk reversal, or because the volatility is going to be high, capitalizing on that volatility in the put structure and selling a put spread. So you're defining your risk and maybe buying an outright call or a call spread. So I think that there's some good value to do something like that. Look at something similar in silver. I mean, when the market's falling down, it's going to be skewed to the point that you're going to have good value in selling put premium. So I think that's something to look at as well.
Okay, well, excellent thoughts as always, Bill. Thank you for joining me this Friday afternoon, and have a good weekend.
Thank you. You too.
Thank you for watching Kitco News. I'm David Lin. Follow me on Twitter at DavidLin_TV.